All right, what's happening, guys? Welcome back to another episode of Sensible Investing. Today, we are going to be talking about 5 stocks that I'm buying right now and will continue to be buying for this market crash. And as you guys can see over here by the logos, I'm sure that you recognize at least a few of these companies that I think should do well when things go back to normality and all this craziness is over. So, as always, guys, if you want to see me do a full video on any one of the stocks mentioned in this video, make sure you drop a comment letting me know which one, then hit the subscribe button so you get notified when the video is out. Stock number 1 of 5 that I'm going to be buying during the market crash is Lululemon. And you can say that they are the people or the company that pioneered yoga pants or athletic wear or active wear or whatever you like to call it, active wear from the gym to anywhere but the gym, okay? So they basically turned activewear yoga pants into an international social movement, an international women's movement where they have fought tooth and nail to be able to wear this how they want, when they want, wherever they want. Okay, so it's the quintessential fashion item of today's strong, independent, modern women, right? So whether they are going to the cafe, put on some yoga pants. Maybe she's doing some gardening. She'll probably be wearing some yoga pants. Maybe she's going to the grocery store. Well, chances are that she'll probably be wearing some yoga pants, and even if she's sitting at home on her ass doing nothing, she'll probably be wearing some kind of yoga pants or activewear. And it's really ironic, and the reason being is because the majority of women that buy yoga pants and activewear aren't even wearing it to be active. So again, guys, what this tells me is that the trend is strong, and the trend will continue. Not only that, but it's all about experiential retail, okay? So in the midst of the retail apocalypse, this is how retail companies survive. They make people feel the feeling that they get whenever they wear their items, okay? It's no longer about the product. It's about the overall feel. And this is what I think Lululemon does well. And that is exactly why that despite the category, which is growing fantastically, right? It has been growing 7% per year for the last few years at a compounded annual growth rate of 7%. And it's forecasted to be growing 4 or 5, good mid-single digit growth. And the company itself has been tripling that, right? So we've gone from matching the industry at 7 to now growing, as you can see, circled in the red, the comparable sales growth, 19%, 18%, 17%, right? 17, 16, 17, 18, 19%, tripling the industry's growth rate. And that's largely driven by not just their company-operated stores, but their direct-to-consumer e-commerce growing at a good sort of 30% clip, all right? And so I think once things go back to normal, and even if they don't get back to normal, right? You're under quarantine, you're social distancing, you're probably still going to be wearing your yoga pants. And that is exactly why I'm bullish on the company. Furthermore, have a look at their China numbers. The China market is only about 2 years old, and already they have grown more stores than their mature market, Australia. They will soon eclipse Canada to rival the United States. Have a look at the numbers on social media. I did a quick channel check, and I had a look at 2 things. First of all, their core yoga pants and leggings, but also their non-leggings. And within a week, you're getting hundreds of thousands of views. But what's even more interesting is if you have a look at the China-specific views. Okay, China only has 30-something stores and a much younger channel, an e-commerce channel, and yet they've already got 50-odd K views, which is 1/3 of the rest of the world, right? And the rest of the world has about 300 plus stores, and it's even become a meme. Okay, so in China, as you can see, Lululemon is at the apex, right, top of the hierarchy. Lululemon above all other brands, and this is in the Chinese and Hong Kong market. And for something to be in a market only 2 years to have already become a meme, absolutely massive, right? Let's look at the web traffic. USA web traffic, all-time highs. Canada web traffic, all-time highs, okay? Australia, same thing. Hong Kong, China web traffic, breaking all-time highs. And as you can see, the paid traffic is declining while the organic traffic is increasing. Have a look at the Google Trend search. Again, America, all-time highs, peaking around Christmas time on an uptrend, getting higher year on year. And again, Canada, you guys get the idea, right? So I think that this company is doing well, and I think that sort of 2-3 weeks in social isolation isn't going to stop any a woman wearing her yoga pants, her favorite yoga pants, and then when we're all back to normal, you can bet she'll be strutting her stuff everywhere she goes. And that is why I'm bullish on Lululemon. Down from about $260 odd, I think anything under $155 is good value for me, right? That's me personally, so I'll be a buyer of the stock at around these levels. Stock number 2, guys. Google needs no introduction. I'm not going to spend too long on this company because you guys all know it, right? Google, YouTube, advertising, Google Suite of Productivity, Google Maps, Google Cloud. You guys know it, okay? Plenty of YouTubers talk about it, so I'm not going to talk about it. What I am going to talk about are a couple of things that I think that people are either not talking about or wrongly talking about. And the first thing is saying that advertising will take a hit during this time of social isolation and social distancing. Quite simply, I think that's not true. I think that certain sectors of advertising will take a massive hit during this period of social isolation and social distancing. However, that will be offset by all of the other companies wanting to ramp up their revenue. Okay, if you've got the European Union telling Google, and I've scratched out the C word because obviously I get demonetized if I use it. Okay, if you've got people to dial back and everybody's now working from home and concentrating their time and attention on streaming and looking at videos and whatnot, you can bet that whatever advertising are lost from, for example, the hospitality and the airline sectors, that'll be replaced by other companies. And that is why I have no qualms about buying into Google at this price. Furthermore, okay, this is their App Store sales. Okay, these are the top grossing games on the App Store. And I can tell you right now, guys, if people have time to kill, they will be playing games. Okay, we're not talking about these big, complex, 50 gigabyte Diablo 4 games. We're just talking about very simple mobile games that you can download. It's free to play. It quickly hooks you into the game. Okay, the majority of these, with the exception of Pokemon Go, because nobody's going to be going outside to hunt Pokemon, the majority of these are called gacha games. Okay, and the reason why these games are called gacha is because it's very simple to start, and then you progress, and then you hit a paywall. And then next second, you're opening up your your wallet to get your credit card, or you're getting mummy's credit card. Then you pay, you hit another paywall, you pay, and then 2 weeks later, you spend about $300 on the game, and then they gotcha, right? And that's exactly why they call it a gotcha game. And every time somebody makes any purchase on the game multiple times, right? We're talking about an average of, say $200 per user, millions of downloads every day, right? Google clips the ticket. Google clips 30% of everything. And if you guys have some time, have a look at how much they actually make from these apps. Okay, I think this is going to spike during the time that we are under social distancing. And let's say worst case scenario, this goes on for 6 months, where you can bet that people are going to be streaming and playing video games, right? And that is why Google is number 2 on my list. And for me, anything under $1,000, I'm going to be a buyer. Stock number 3. Okay, obviously Facebook needs no introduction. Added together, people spend more time on a Facebook or Facebook-related app than any other app in the world. Okay. Furthermore, what this actually translates to is if the average lifespan is 75 years, you'll probably be spending about 5% of that on either a Facebook or Facebook-related product owned by Facebook. Okay, guys, and very similar to Google, you guys know a lot about this, and I'm not, you guys already know, right? So I'm not going to tell you what you already know, but what I am going to tell you is going to be focused on, again, things that people might not be talking about. The first one is the gaming revenue. Now, obviously, Facebook doesn't disclose this because I think that with the amount of money they actually get from their top grossing games, which if you look at it, you feel like you're walking into Vegas, right? It's one big electronic casino. I think if they actually disclose the amount of money they get from these games, they'll probably have another 10 lawsuits from the regulators, okay? And that is exactly why they don't disclose it, and they sort of try and divert your attention to ARPU, whatnot. If we're going to be locked up inside longer, you can bet people are going to be on these much more, okay? And then the other thing that I wanted to talk you guys through is much like Google, so 30% revenue share. Anytime anybody spends any money on this, they clip the ticket. 30% revenue share, awesome. The other thing that people aren't talking about, and don't sort of sleep on the dark horse. I think in terms of streaming, Facebook is the dark horse, okay? We're not just talking about video, which people aren't talking about, but we're talking about Facebook gaming streaming. And not just gaming streaming, but streaming in general, okay? And the reason being is because you've got some gamers now making much more money streaming on Facebook than they are Twitch. And I think that that's going to slowly upset and offset the balance and bring people to Facebook, okay? Keep in mind, Facebook streaming has only been live for about a year, okay? So what happened was they soft launched this back in March of last year, and already they've got 153,000 users. Twitch has about 3 million users, except rather than soft launching about a year ago, Twitch has been going since 2006, all right, guys? So don't sleep on this one. I think that people are going to be spending a lot more time on Facebook than people are giving credit, where all the people saying, oh, Facebook is dead, okay? I just simply don't agree with that. And that's why, for me, Facebook is number 3 on my list. And for me, the stock, anything under $150, I'm going to be a buyer because I think that's good value. All right, guys, stock number 4. So stock number 4, Afterpay. Whenever somebody asks me if they are, if I am buying Visa or MasterCard or any other sort of, payment company, I tell them that no, Afterpay is the only fintech I need. And they give me a very blank look. And the reason why I think is because Afterpay is going to be the next big thing in terms of payment. I think Afterpay is going to be the next PayPal or PayPal equivalent. Millennials absolutely despise debt and credit card. They have no interest. 2/3 of them will not be using a credit card ever. And as they get older and the new generation become millennials of their generation, I think that this is going to continue, right? So people are constantly saying no to credit cards. And whilst I know that other investors are bullish on things like, Visa and MasterCard, I think the real company you should be bullish on is a fintech, something like a buy now, pay later. And what better way with one of the innovators, okay? So we've got Afterpay. And the reason why they are keen on Afterpay service is for the simple fact that it doesn't get you into an endless spiral death trap of debt. And the reason being is because the minute anybody misses a payment, the entire service is suspended until the payment is fully paid off, okay? So they cannot use it. It's not like a credit card which traps you into debt. Furthermore, Afterpay will not charge you interest, and the late fees are either equal or less than that of what the credit card company charges you. And that's the beauty of the model, right? It's completely free for the user. So it's the actual providers that get charged a small fee, and I can explain later why that's not a problem for them, all right? Average outstanding balance on Afterpay is about $200 odd, right? So people, average transaction $150, average balance $200. Compare that with a credit card, $6,200, racking up rolling interest, fees, debt, okay? So, people tell me, oh, this company is a fintech, they're screwed. I can tell you right now, the banks with people on average of $6,200 in debt, I think they're a lot more screwed than somebody deciding to pay off $211 on average, okay, guys? So not a worry for me at all. Furthermore, the average age group, as you can see, it's not just your sort of millennials. You've got your Gen Xers, you've got your Gen Zs, and they actually lean towards the middle to higher income index, okay? So, again, people wrongly assume Afterpay is predatory and preying on the people that have either an unstable income or the gig economy. And again, that's not true, okay, guys? Just have a look at the breakdown here. It's not just preying on the young, stupid, and weak, okay? Added together, the Gen Z and Gen X, they are actually a bigger user cohort than the millennials, okay? And this data is actually a little bit old. They're now about 6.5 million users, so their exponential growth rate has just been massive. Another reason why I'm bullish on Afterpay. Furthermore, Afterpay isn't just a way to pay for something, but it's actually a marketing channel for retailers who are just struggling, right? Struggling to get the attention of these buyers, because like, how do you get their attention, right? And yet you've got people like this girl here and a lot of other people, if you have a look at their Instagram page, and they are going to companies saying, I think you guys should offer Afterpay, okay? So this is free advertising. It's absolutely insane, okay? I've never seen anything like it, and that is exactly why the merchants are happy to pay the fee to Afterpay to have these users, okay? Just have a look at the merchant growth. UK, USA, and keep in mind, USA is only about 2 years old to market. The UK market, it's only about 6 months old, and it's already exponentially growing, some of the biggest brands in the world. Furthermore, they have the highest NPS score out of any payment provider, according to Roy Morgan Research, all right? So highest NPS score, and, it's not just that. You can verify by how much their new Instagram followers per day are growing, and this is compared with all of their buy now, pay later competitors, right? Sezzle, Klarna, QuadPay, whatever. They are absolutely smoking these guys, and as you can see, while everybody else is sort of going sideways, Afterpay is going up in a straight line. And again, that's just testament to the company and the user experience people get from using the platform. You've got people that signed up just last year, they purchased 7 times a year. Then the next year, they sort of doubled that to 14. Then the next year, right, 22. Okay, so what this tells me is people love it, they keep coming back, and they're not going to leave. No matter how many other competitors are out there, otherwise, why are they purchasing more? Why is 90% of their business coming from repeat purchases? And why are 10 million leads getting referred on an average month to different merchants? All right, so there's so many things, so many reasons to be bullish about Afterpay, and it's not just a buy now, pay later platform. And if you have a look at what the likes of Visa and MasterCard are doing, you'll realize that they're actually crapping their pants, right? And this is the exact reason why Visa and MasterCard are actually partnering up with Afterpay, because they know that if they don't do something and capture the attention of these millennials who despise credit cards, they're going to be irrelevant. They've fallen from about $40 to $12 odd in a matter of 2 to 3 weeks, and at these prices, I'm a buyer and I will continue to be a buyer, okay? And that's why Afterpay is stock number 4 on my list of 5 stocks to buy for this market crash. Now, last but definitely not least, we've got Disney stock, okay? Disney, I think, will be the hardest hit out of all of these stocks and will take the longest to recover, but I think Disney is a good long-term hold because they have some solid brands, okay? And you guys might say, are you buying Disney because of Disney Plus? And the answer to your question is no, I'm not. And the reason being is because, as you can see, direct to consumer, okay, that's DTC, that's their Disney Plus business, that is a very small portion of their revenues. They are still largely getting a lot of their revenues from media networks, parks, and then their studio business, okay? So you guys might be saying, well, why are you buying Disney if they've closed down Disneyland and, they've delayed film releases? And again, guys, for me, this is definitely a long-term buy and hold. So for me, Disney is a 5-year investment. And the reason being is because if you have a look at these titles, okay, and we're not just talking about the box office, we are talking about, Lion King, Frozen, Black Panther. Just have a look at the titles of any of these and see what the recurring theme is. And the theme here is that Aladdin has been around since 30 years ago, and yet all they need to do is rehash it in 1992, make about $500 million, and then they rehash it again in 2019 and make $1 billion, okay? So what we're buying if we get Disney today is we are getting a timeless brand that'll be timeless, continue to be timeless, many, many years to come. And the minute this whole sort of, social distancing and lockdown blows over, people are going to be back at the parks, all right? Because they're going to either rehash something or, do some kind of a remake, and then it's going to get launched to the movie theaters. Then people are going to go to the parks because they could create a ride, for whatever the thing is. And then they're going to go and release it to, direct to consumer, and then they're going to watch that, right? And it's just a never-ending feedback loop, right? Their attendance is definitely going to be falling off, okay? But let me tell you, after the GFC, as you can see here, the attendance has slowly risen, and, it's made all-time highs, okay? And I think that's exactly what's going to happen once we're going to be back out of this sort of social distancing, quarantining, whatever you guys like to call it. I'm very bullish on Disney, that the brands are timeless, and every single year, out of all of the box office and other digital sort of revenues, they are the undisputed leaders, okay? Because you've got Fox and Disney, you add that together, they've got over a quarter of the market share, whatever year that is. If they have a great year, it's probably a third or even more than a third of the market share. And what that results in is a never-ending feedback loop of, cause and effect, and I think that, these brands will just continue to pay dividends into many years into the future. For me, anything $95 or less, that's good value. Hope you enjoyed it, and again, let me know what you guys are looking at. Let me know what's on your shopping list and what stocks you are buying. And until next time, happy investing. I'll catch you in the next video.